Hey, it's Wednesday, the 23rd of March, just gone 10:30 in the UK. Just going to run through a couple of trade ideas for Forex. I will admit I've been struggling to find decent Forex ideas, basically because so many Forex markets are just in these huge longer term sideways patterns. And a lot of the markets are just going up one day and down the next. However, there are some short-term trends. What I'm looking at now is the 4-hour chart for the Aussie dollar versus the US dollar. Now we've had a good run up. It's been a real choppy one. I mean, look, this is what I mean. We've been in a bull trend, look, since the end of January. But how could you possibly have run a long position through that? You know, if I told you that the market was going to run from where did it go? 69.66 up to 74.72. So we've had a good 500 pip run. It's a nice run. If I told you at the end of January we're going to go up 500 pips, you'd have been over the moon. You'd have bought the Aussie dollar and sat back and you know, well, if you had a trailing stop, how many times would you have been stopped out? You would literally have had to sit back with no trailing stop because the market's just had these very deep pullbacks. This one pulled back from 72, let's call it 72.50, down to just below 7100. So 150 pip pullback, something even bigger here. That must be what's that? 72.84 down to, okay, so that's a 200 pip pullback. You know, it's been impossible to run a long position as a swing trader in this pair. Again, this massive pullback. So my point being, even if you knew that the market was going to go up 500 pips in a month and a half, I think you would still have struggled to hold on to a long position. And this is why I found it so difficult to trade the Forex markets recently. You've really got to be in and out. And this is just the 4-hour chart. We'll have a look at the daily chart in a minute. But the 4-hour chart quite clearly shows a trend line, not a massively longer term trend line, but one that goes back to June 2021, long enough, worth paying attention to. It coincides with the short term 78.6% Fibonacci level and the longer term 50% Fibonacci level, and we'll see those more closely when I now go on to the daily chart. There we go. Okay, so I'll now open that up. Again, you know, even the moving averages are telling us how confusing it is because they're basically all converging on the daily chart because ultimately we've just been in the biggest sideways trend. The 500-day moving average is pointing down. The 200-day, is up, the green one. The 200-day moving average is pointing down, so they're conflicting. The 100-day moving average is starting to flatten out, but that has been pointing lower, and the 50 is just about to cross above the 100. So the moving averages basically have been no help to us whatsoever. They haven't even been acting as support and resistance levels, not in any reliable way at all. So yeah, it has been a real struggle to try to find decent trade opportunities. But this one I think is worth a go. As I said, 78.6% fib in the short term, 50% fib in the slightly longer term, going back to the beginning of the year, and we've got a trend line going back to June 2021. Sorry, that's actually Jan 2021. That Fibonacci level that I have. So that's a good year-long Fibonacci level, 50%, worth paying attention to, I think. We're getting overbought on the daily chart. We are overbought on the 4-hour chart. It's not the best argument I have for a trade, but at the moment, it's about the best argument I can find in a market that's choppy and, well, I was going to say directionless. We'll have a look at the yen in a sec. Now, happily, there were some great swing trade opportunities. And of course, once we broke above this trend line here, I did actually do a video on some yen patterns just before the break. Now, if you're a subscriber, you hopefully will have jumped on this because I was warning about a breakout. This could have been a triple top, but they're very rare. It wasn't a triple top. We just broke up, and of course we've rocketed. So, you know, at least in the reports, I've been suggesting holding longs. Admittedly, difficult to hold a long over the weekend, but for anyone that did, further rewards this week as we pretty much double the amount of gains that we had after the breakout. So, dollar yen worked well, Aussie yen worked well. Again, the breakout through the resistance, a beauty. Well, basically above this line here. I actually had the breakout at a lower point, but even when you just put the trend line in, even if you bought the break above 86.65, you've done extremely well. The other one that we were looking at was the New Zealand dollar versus the Japanese yen. Here we go. another great breakout. So that one's running and running. I'm tempted to think we're getting near a peak, but I'm not going to say that we are. I'm going to wait for the signals, because when I look at the overbought situation on the slow stochastic down here at the bottom, for example, on the New Zealand dollar versus Japanese yen, very overbought, but there is no sign whatsoever of a peak yet. Yes, today I can agree that today we've peaked. We went up to 84.51. We've pulled back 30 pips or so. I would need to see a very negative candle before I would even dream of shorting any of the buying the yen, shorting any of the yen pairs is what I mean. So they look pretty good. Pound is worth looking at. Cable. I've been talking about this inverse head and shoulders pattern now for quite a long time, and finally it played out. Let's have a look at that on the hourly chart. I think that would be the best perspective. So here it is, a beauty. Left shoulder, head, right shoulder dithered a little bit. We've got some bullish crossovers on the 1 hour chart. We haven't got them on the 4 hour chart yet for the moving averages. Now we ran up to the 23.6% fib at 33.00. That was my first target, 133.00, and that's just a beauty because we've hit that and pulled back. There we go. I'm going to go all the way back on the hourly chart to show you why I have the 23.6% fib there. So this goes all the way back to May, June, the peak May, June. And as you can see, it was a real wavy move down. Then we got the inverse head and shoulders pattern, which you can't see now because I've hidden it by screeching everything up. The 23.6 was at 132.90, 133.00. That was my first target. I didn't suggest a short position there purely because we've got this lovely inverse head and shoulders pattern, which I think is more important. Obviously, if I had suggested that, we'd now be looking at a potential profit of up to 80 pips. I'm hoping that this retest of the trend line of the neckline of the head and shoulders is an opportunity to jump into a long position. It's quite classic for the head and shoulders to retest the neckline and then take off. And on the next test of 133.00, I'd expect us to burst through it. We've got the 500-hour moving average, the green line, also lending some support. Yes, we're trading just below it at the moment, but hopefully the 50-hour moving average will keep us in positive territory and we will eventually bounce. I talked about the euro US dollar at the beginning of the week. I talked about how we were probably forming a bear flag and we would probably break to the downside. I identified some very strong resistance levels up here, but we didn't make it that far. Yesterday was quite confusing. I got stopped out. We broke below the trend line, which I assumed was a break of the bear flag, the upper sloping trend line of a bear flag. However, I was fooled. We hit the 23.6% fib in the short term, bounced back up, closed up on the day. So I left it. I have actually sold into a short position now. I got in at 110.35, about 8 pips below the high, and we do seem to be easing back. So hopefully now we will continue. You know, euro US dollar is clearly in a longer term bear trend. So being a trend follower, that's where I like to be on the short side at the moment, and hopefully that is starting to work now that it would appear that we have clearly broken. We've opened the day below the trend line and we are heading south. So I feel quite confident that we will head down and maybe head towards the March low, which is around the 108.00 area. You will remember from other videos that there is a big 5-year trend line in the low 108.00 area, a rising trend line, which you can see on the weekly chart, which I'm not going to show you now. You can just look at the video that I did on Monday. I want to push on to another pair now, but that would be a target. So if we do drop 200 pips, that would obviously be an awesome trade for today, for this week. Now this is a bit of a recap. The US dollar versus the Canadian dollar hit a very long-term trend line. Well, I say very long-term. It's a 10-monther. It's a good one. And it is holding quite nicely, as you can see. Now, this is the daily chart, so we've got all the data in there for the last 10 months. If I scrunch it up a bit more, we can go back over a year and see that this is a beautiful little triangle. I've been talking about this for several days, maybe even a couple of weeks now. So we've retested the low, although we broke the red 200-day moving average. That's obviously a bit of a negative, but I feel confident that we can bounce off this trend line if we can get back above the red 200-day moving average, which is around yesterday's high. 126.10, 126.20, then we can really stage a decent recovery. But already today, we're seeing a nice blue-bodied candle off the trend line in oversold conditions on the daily chart. We've actually got a bit of divergence on the 4-hour chart as I look over at the hourly chart. Okay, the hourly chart, sorry, is starting to recover on the slow stochastic, but when we look at the 4-hour chart, we've actually got a bit of positive divergence. So I'll just have to open up this slow stochastic to show you. Where is it? There we go. Why is that not working? Okay, I'm obviously on the wrong line, am I? Yeah, I am. Okay, I'm not sure what's going on there. There we go. So you can see that recently on the 4-hour chart, the price has continued lower. Could be a rounding bottom, actually, when you look at it. This could be a rounding bottom. I certainly hope so, because I'm into a long position on this. But you can very clearly see from the slow stochastic on the 4-hour chart that we have a nice positive divergence with the slow stochastic already starting to trend up. So that's another positive in our favor of a long position. We've got quite long wicks actually as well, haven't we, on some of these candles on the 4-hour chart. So that hopefully indicates that buyers are coming in there. They see that it's a good support level and the buying interest is starting to build, and we will eventually get some momentum to the upside. So those are my favorite trades for today on the Forex markets. I don't think there's anything else I really need to mention. No, they're definitely my favorites. So we'll keep an eye on those and we'll have a chat about them into the end of the week. Please do like, subscribe, share, and please do post your comments or questions about these trade ideas in the box below. Thanks very much. Oh, I'll also post a full technical analysis report that the same one that I give to my subscribers. I'll put it in the description below so you can follow that as well.